Hello, 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 everybody. We actually closed down for a day. Red Thursday. Had an OPEX Friday. Good afternoon, Patrick. Hey, Daniel. Happy Tesla Day. Why is it happy? Because Tesla triggered a big double top pattern? I don't know. How about Happy SpaceX Day? Happy SpaceX Rocket Go Boom Day. Hey, Martinez, good afternoon. Good afternoon, Royal Palms. Hey, people hiding in the background, why don't you jump into the text and say something in the chat? And what's with only one thumbs up? Can I get two thumbs ups? Hey, Paul. We'll see. Next week's going to be the real important week. Tomorrow, my least favorite trading day every month, OPEX. Hey, George, it's 420. Yeah. Is that the Elon reference because his favorite number is 420? Well, his rocket went up in smoke. Hey, Todd, thank you for jumping in. Yeah, happy 420. You know, I actually forgot that it was 420. I don't know how I forgot it was 420, but I forgot it was 420. I got up. Look, hey, hey. Let's see. We got the Bertha shirt on. We got the Bertha Dead shirt on. See, I can start wearing it. Well, tomorrow's supposed to be cold again here, but today it got some nice weather. By the way, it's not going to be super long live stream. We're under a tornado watch, and I got to get the dogs out. So not super long. I want to make sure and storms are already scheduled to hit. So Indica. Well, all right. Everybody put in their favorite. Oh, but I am celebrating with a dead shirt. Do you think Elon will go to Mars? You mean, are we talking physically or are we talking through substances? I mean, I have to ask that question. It also closed below 420. Tesla closed below 163. There's two thumbs up from Todd. So there we go. Do penny stocks ever recover? Sometimes, but a lot of penny stocks are penny stocks for a reason. And a lot of penny stocks also go bye-bye or remain penny stocks. I generally, unless there's a very compelling reason, don't like to trade stocks below $5. I really don't like to trade stocks below 10 unless it's a specific ETF, like you could when Sprott Gold or something below 10, that's a different story. But I mean, below 5, and then you get below $2. Penny stocks are penny stocks for a reason, and they can be highly. I mean, the people come in here and talk about manipulation. Well, there is occasional market manipulation, but also it happens a lot more in penny stocks and pump and dump schemes. And, they're thinner traded. There's fewer outstanding shares. You're not getting a million share turnover a day unless there's a squeeze play or some pump and dump. That's why I don't bother. Learn to invest properly. And then if you want to set aside some gamble money, you know what? For a little bit amount of like Vegas money for, hey, let me go in some of these crazy things and see what I can do. That's something, but don't make that into a career. Don't try to focus on trading penny stocks or follow the Reddit boards. What's the next squeeze? It happens every few years and everybody gets on this bandwagon of trying, look, it went from 50 cents to $3 in 2 hours. And then the people can get out at $3 and then it's back to 50 cents or lower. So, Coco is still alive. Elon is going to the moon before he goes to Mars. Well, there we go. Good evening, Anissa. If the Fed starts QE again, will they recover? Okay, well, first off, if the Fed starts QE, something's really gone bad. Okay. And so you have that counteracting point. Don't look at, and the COVID stuff was not just QE, it was like tripling the whole money supply in a matter of months. Okay, so even if you started QE again, which I think they're going to be very cautious of, because of where the balance sheet stands, so it would have to be something pretty bad. You're now gonna you're counting on. Also, it wasn't QE that triggered a lot of these penny stocks to become, it was the COVID thing with people being locked in their houses, getting paid by the government to sit at home. Even if they had a job, they weren't focused on their job. They were focused on what's the Discord or what's the Reddit board say is going to be the squeeze of the day. I got to go become a millionaire trading these stocks. So it was sort of a perfect storm of a lot of things. All right. Enough about that. Do you have to pick a pilot for next Starlet launch trial? Do you send Pete? I can't even. Buttigieg. I don't know how to say his last name. John Fetterman or Dianne Feinstein? You're really gonna get me to answer this? That's easy. It's Pete. I'm sending Pete. Why? Fetterman is already pretty incapacitated, sadly enough. And I don't know how he got into the Senate. You know what? And the fact that, I'm a libertarian. So, not saying this from a Democrat or Republican point of view, but can we put at least a candidate who didn't have a stroke and can't string a coherent sentence together? That's probably not the best candidate for any public office. And Feinstein should have been out of there many years ago. Period. I don't need somebody 90. We can't find a better person. Again, not picking on any political party. I say that, you know what? We can't get better than a president in the 80s? Really? On either side? And can you stop taking away our friggin' rights? That's why I'm a libertarian. But not an anarchy libertarian. There needs to be some rules in place. Okay? I'm a constitutionalist libertarian, if somebody wants to know. Now you'll have people will drop off, but whatever, that's what I am. So, I don't trade them, I'm just stuck. You want to sell, but it's too late. Well, again, you're on a wing and a prayer. Some of them might recover, some of them might never recover, some of them might go bye-bye. You got to look at each one on an individual basis and do some company research. And if there are certain things that could turn around, you might, there might be a case to hang on to them. But generally, if I'm in a trade and it's a lost cause, first of all, I'm going to give this advice to everybody, no matter what you're trading. Always know your out point before you start the trade. Okay? Period. Know where you're getting out. Know what's called a stop loss. You can put it, if you're not putting it in the market, put it on the paper and stick to it. If the hit's here, I don't care if it's the best stock in the world. Okay? Know where the get out point is. And know between your entry and that get out point that's the risk you're taking. So you're not stuck in stuff, because I see this, either people don't know where they're getting out, or people don't follow their get out, and now they're like, oh, I would have taken a 20% loss and now it's down 50%. Well, now I don't want to get out because now I don't want to take the loss. And then you're just tying up money, like I've talked about many times in the past, I know people who are still in Cisco from the .com because the NASDAQ collapsed, and it's still, their entry point was still higher than it is now. 22 years later. So you've tied up capital for 22 years. Not smart, in my book. People can disagree with me all they want. All right, what is today? Is it Thursday? Yeah, we already went Thursday 420. Boy. We had the CB leading index. I put that out. I retweeted that. You know, this is again 100% track record with where we're sitting on this, coming in horrible, down minus 1.2. It was already in contraction, but that's really bad. This is 100%. Now, can any 100% thing be wrong and turn into a 90 something percent? Yeah. So, I've seen it happen before. However, am I betting against us going into a recession? No. And we had Waller, we had Bowman, we had, I think we had, who else do we have? Mester? We had Mester. Everybody's talking over to take it over 5%. I don't see any reason why the next rate hike is pretty much a done deal at this point. I mean, PC would have to come in really, really low. By the way, tomorrow the big thing is going to be OPEX. We do have the manufacturing, composite, and services S&P numbers, which are forecast for manufacturing contraction and both services and composite to still be an expansion. And we have Cook speaking, but that's after the cash close. And you only have the rig counts for oil traders. So, very quiet day, but OPEX is going to rule the day. See, Google, little bounce there. Rotation into some healthcare. Tesla taking it in the shorts. What else? Visa, MasterCard up pretty nicely today, but it was somewhat a mixed day. Most mega caps besides Google were down. Nvidia closed down to 3%. Oil continues its pullback. You can see here, consumer defensive only up 14 basis points. Everything else negative. Fed watch, 84% for the rate hike. Interesting enough, we had September drop from a pause to a cut from that 5 to 5.25 level. Fear and greed still solidly in greed mode. How do you decide on your stop loss? Well, I use the concepts I talk about here all the time. Price action levels, rotation zone concepts, harmonic levels, and essentially I come up with a stop loss, which is based off. I look at the trade. I say, I'm getting in for this reason. We triggered a double bottom. We triggered a percent beat buy. We triggered a rotation entry. Where does that level, where is it invalidated? If the market, and I do all stops, I have catastrophe stops, which means if the market just goes down, like, all right, let's say I got in at 50 and on a closing basis, the trade was wrong if it closed below 47. I might have a catastrophe stop at like 45, 44, okay, in case market goes into full blown just dive mode. Everything's getting sold and I don't want to wait around for the close. Other than that, all my stops are generally triggered on a closing basis. Where is the trade on a closing basis? Where does it invalidate the reason I got in the trade? And it's going to be different for different strategies. But I will know that. It's why I stress targets and stops. Because I can come up with a target, I can come up with a stop, I can know roughly where my entry is, and then I can calculate reward to risk. And if I know my trade percentages, either from historical precedents or from testing, I can figure out my trade expectancy and then know how my account can grow. Yes, and not every trade, you can have a 70% winning thing and you can get 10 losers in a row. So you can get a drawdown, but you can also get 10 winners in a row. By the way, we had CSX looked like it was up after the close. That's the one I was looking at. PPG was up a bit. Tomorrow we got P&G is the real one I'm going to be looking at. So not much going on tomorrow besides what was I going to say? Boy, it's 420. No. Besides OPEX. So I checked DULL and it's still going up. Like, this stock is crazy. Glad I didn't short it. You want to wait. Remember, it's a thing. Now look. Look, it's still not above the 62.5, right? Okay. But you had a little mini short pattern. It's so, I mean, I'm telling people, if you want to learn at least one pattern, start like Christoph, who's in here all the time, has been testing doubles for his own sake. And he'll probably have some rules slightly different than mine, but there's a little mini double top. Look. Boom. Now, on a bigger perspective, that's still one side of a top. Now we got to test out the bigger one. Is this? Yes, it hit the 75 harmonic. I mean, I share so much stuff on this channel that you can go take what I've shared and even test it with that. Could this be a topping pattern? Yeah. It's into the weekly rotation zone, so you got to take that under advisement, which is why I also teach rotation zone concepts. Okay? Look, and that would take it to the prior little support area. This is the end of a clear path on a weekly basis. And the target. That does not mean it's a higher probability because the end of the clear path and double target roughly work out the same. But that's something to consider. So, you were looking to short before? Well, there was a mini short here, and now there's a bigger potential short. Does this ever have to trigger? No. But at least I'd have a pattern. At least I would have a pattern. Does that make sense? Okay. Ooh, that was nice. See, this was the most recent swing up. Here was the pausing bar, remember? Go to a pausing bar, nice pausing bar there. So I like the harmonics. It also gives me a target. Doesn't have to stop it, straight to it. And also what's between the 50 and the 62.5? A potential rollover area. So it could be making a topping pattern. This is also why I don't like to front run, especially from a shorting perspective. Why in equities? Now I'm just talking equities because equities have a natural upward bias. So there you go. But with that, the person you all want to hear from, Bob Iacchino.
There you have it.
There you have it. Is that all you have to say?
That's all I have to say. Sorry I'm late, guys. I was still on a call. The call ran long. But I had it all set up to push the button to join as soon as the call ended. So I'm here.
The push the
So,
Bob button.
yeah, so I'm basically here for questions. But I will throw this out. I was looking at somebody asked me last week, why about those October lows. And I don't remember if it was here or somewhere else. But I saw an article on Bloomberg, and so I read the article, and it basically said the S&P 500 index has never bottomed before a recession. Data going back 100 years suggests more downside if the economy falters. So somebody in here asked me if the Fed's going to stop hiking rates and actually start cutting rates. Why would that be bad for stocks? There's your history. And, they've got a chart up here, difference in all the way back to August 1929, where the difference between the recession starting and the market bottoming was 34 months. 1945, it was 1 month. February 2020, it was 1 month. So there's a big range of time for that. So I just want to throw
I wouldn't go off the Feb 2020 one unless the
Yeah, I wouldn't either.
I mean
I'll be right back. I'm sorry. This is what delayed me. I'll be 2 seconds. If there's any questions, get them ready.
Get them in now because, again, this live stream is not going to run long. Again, we're under a tornado watch. Nothing's imminent, but I want to I'll make sure all the dogs get out for their walk, go to the bathroom and everything because we are going to have storms. So I don't want to have 5 doggies trapped inside with having to hold it. Let's put it that way. What do you think about the Elf, not the movie? What do I think? I don't. Right now, it's obviously a story stock. I think it's going to get, when you get something overdone like this far away from the rotation zones, I would definitely be in trailing mode and not aggressive. Uh, I wouldn't be looking to add up here. I'd be, if you're not in it already, I'd be looking to, I wouldn't be adding. I'd
Sorry,
be
guys.
waiting and it'd be in trail mode. Let's see. Hey, Amit. Let's see. Yes, people still buying the dip. But the recession is just mild, nothing crazy.
I mean, the Feb 2020 recession was mild. You still didn't have a bottom until the recession actually had started already. The fact of the matter is, and look, this may be the first time it's ever happened. Okay. And also, we might not go into a recession. But if you believe we're going into a recession, as I do, you can't call the October lows the lows. You can't. It has never happened before. Now, does that mean it won't happen this time? That would be the first time it happened in just short of 100 years. Hey, it took 106 years for the Cubs, I think. So it could happen, but you're just, you're betting on a 1 in 100 year event. That seems like a bad bet to me. That
Again,
doesn't mean, again, Mike and I've said this ad nauseum, doesn't mean that you can't make money on the upside just because the October lows are the lows, aren't the lows. If we're right about that, if I'm right about that, Mike, you're still in that camp, right?
yes. Oh, yes.
Okay.
And even I talked about this before you got on, the CB leading index down minus 1.2%. This is another. Every time it's dropped this much, every time there's been a recession that follows.
And
100%.
you tweeted it this morning, right, Mike?
Yes.
Yeah. So if that indicator is correct, it's 100% probability. Well, it's happened 100% of the
In
times
the
in the past.
past.
That's different than 100% probability.
Correct. And
100%
I
of
said
the
before you got on, this could be the first time it doesn't. There's always,
yeah,
but I'm not betting against. I'm not betting to say, okay, this is going to be the one time that breaks the rule. Because,
yeah.
all
So
right,
somebody, yeah, and it's the same thing with this recession thing. The market has never bottomed before a recession in 100 years. It always bottoms once the recession has begun. Now, here's the thing: if we're in a recession right now, which that's unlikely given where GDP is and where the job figures are, 3.4% unemployment with a positive GDP is not likely a recession. But if we're in it now and we started it in September of last year, 100% of the time, it would be right again. But it's unlikely that that's the case given the couple of positive GDPs and a 3.4% unemployment. We're not in a recession. Let me rephrase that. The recession did not start in September. How's that?
the consumer, yeah, the board that would look at this. I mean that
Mm-hmm.
it would be the a non. I don't know. They would have called it already. if we,
Right.
I mean, they call it after the fact, but look. There's even nothing on the horizon yet.
Right.
They'd be calling it a year after the fact at this point.
Right.
You know, uh, Bob, have you seen a net reduction in equity ownership from institutions or insiders lately?
I don't really watch that much. So, Daniel, if you do watch it, let us know in the next one if you have. I just don't really watch that much. Generally, I don't trade off of insiders, so I find it interesting if I hear about it once I'm already in a position. Whether it's hopefully it's in my direction, then I like it. But no, I don't really watch that. So
Uh, Amit, yes, the double triggered on a daily basis. I'm also watching it because it's a better weekly pattern. I'm watching for it to trigger tomorrow with the weekly close. Just wanted to jump in there. With that, feedback with 16s on the VIX, I am comfortably hedged. Not a bad thing to do from my perspective
yeah, no, it's great. I agree. That's great.
with volatility, and I've talked about this a few times over the last few days. When volatility is this low, if you're expecting a rollover move, and even if it doesn't take over out the October lows, hedging could be, if you have a substantial portfolio, I think putting on a hedge with the VIX, all right, even at 17, gets to no brainer. You'd be silly not to do it.
Yeah.
Royal Palm wants to know your thoughts on oil.
Uh, Seems like a false breakout. I mean, from a perspective of the fundamentals, we actually had some indication that the Chinese demand was about to pick up. Their refinery throughput, which is basically how much goes through a refinery, right? How much goes through and they put out. That's where those knuckleheads came up with that word. Hit a record high in March. So they were producing and exporting more. So there was actually signs that the China reopening was finally going to drive oil prices higher. But when you start to get all this bad economic news, the perception of lower demand starts to take hold. I would say that's what this is because I don't see any other reason for it. But it feels like a false breakout right now. We talked about it last week, and I said, we're going to get a retest. We're going to go up to the 200, and I suspect that it'll break out. It didn't. I also told you guys I didn't have a position because I didn't have a trade, right? Had it went down, test the top of that channel that you can clearly see on the chart there, and then broke back out above that in the 200, I would have gotten long, but I did not.
So, oh, really, George?
Well,
Bob, this one's for you. You're judging Miss Congress 2023. Rank the contestants.
you want me to rank all of them?
Maxine Waters, Elizabeth Warren, Marjorie Taylor Greene, Amy, how do you say her last name?
Klobuchar.
Klobuchar, and Kristen Sinema.
I will tell you this: Kristen Sinema wins. That's all I can tell you. I can't really rank the rest. I mean, first of all, there's not a low enough placing for Maxine Waters, and Elizabeth Warren would only be a notch above her. I have no interest in Marjorie Taylor Greene at all, politically or otherwise. So I would just tell you that Kristen Sinema would win. She looks like she was maybe, you know what, I'm not going to say this. Never mind.
Remember, we have
You just Mike breathed a sigh of relief that I didn't say it.
Yeah. Oh. Bob, why do some countries still have an increase in inflation like UK compared to the US?
Well, number one, the Russia-Ukraine war affects them more directly. Number two, they were behind us the whole time, Coco. If you go back and look, you'll notice that the US led in inflation, and then we led in the fall of the growth of inflation. And only Australia and Canada really were ahead of us in pausing. And Australia actually went back to hikes. And then they went back to a pause. So they're just behind in the economic cycle. So they were later to the inflation party, and they're later to break down out of it.
Well, it's an inflation party. I wouldn't have said it was a party.
Well, even there's dark parties. There's like eyes wide shut parties.
Okay, so now you got eyes wide shut. Oh boy, Bear better than beer wants to know. Bob, Apple insiders start selling their shares, but the market's still holding quite nicely. Why?
I'll let Mike comment on this also, but look, insider selling is not a 100% accurate way of trading. There's a couple of things that could be going on. Planned sales, where they had already planned these sales months, years, sometimes years ago. Number two, I mean, you don't know, a guy might just want to buy a house in Malibu and he needs to sell shares to buy it. It's not even close to a 100% good system to follow. So just be careful with that. I've never seen one that's well, I shouldn't say that. I've seen a couple of people claim that they're in the 70% probability camp. That's the highest I've ever seen. What about you, Mike?
Well, also remember, let's say insider sales are smart money because it can be, and there could be some timing mechanisms, but generally stuff rotates out from smart stuff and this is not just insiders, it also rotates out of smarter institutions into less smart people and less smart institutions who are holding things at the very end. I shall call them bag holders. Just like a bunch of people I know that we have heated discussions all the time that I'm an idiot because I don't buy every dip because that's the easy way to make money in the markets. And they're also the people that some of them are still holding Cisco from 2001. So, because it never got back to their break even price.
Right.
That's what I'll leave it said. You know what? You can do what you're going to do. Insider sales, and I'll reiterate what Bob says. There might be planned sales. There might be, uh, if you put plans in place, you also have it rotate out. A lot of people don't believe there's going to be a recession. A lot of people think the lows are in. I've talked to a lot of people still say we're going to new highs this year. I'm not in that camp. But if you're in that camp, why does it have to roll over? Every time Apple dips, just buy it. But if
Right.
you're wrong, you're buying it at awfully lofty levels compared to where it could be in 6 months. Bob, soft, hard, or bumpy landing? Pick one.
Hard, which would be a recession.
What do you think of Ray Dalio's stuff on cycles and his latest blog about 2 days ago?
I haven't seen it. Feel free to send it to me, Richard, and I'll take a look at it. We could talk about it Tuesday, but I haven't seen it.
Put it in Discord, Richard.
Yeah.
On
Tag
the
me in it.
articles, there's an articles section. Put it in Discord, please.
Yeah.
Uh, Hi, Bob. Real estate, single family homes prices increasing. What is the market pricing?
Home prices fell by the most in a decade. So I'm not sure, Shashi, where you're getting that. Um, it's 0.9% lower from last year, which is the largest gap in 10 years in terms of the drop. So I'm not sure. Now, there's probably regions. As a matter of fact, I probably live in one of those regions where they're not falling and might even still be rising a little bit. But if you're talking about individual places, you'd have to look at those individual places. But nationally, the median selling price of previously owned homes is $375,000, and that was a 0.9% drop from last year.
And some places are still. I mean, the area I live
Mhm.
in is actually holding up quite well because of the low inventory. And our neighbors just put their house up. They're looking to move to Wisconsin, and they literally stuff in Wisconsin. And I don't know why you'd move to Wisconsin. Uh,
Just to get out of Illinois.
yeah, but I would if getting. I agree with that,
You'd
but
go one state south instead of one
I'm
state
not
north.
going further north to get out of
Yeah,
Illinois.
no. So I actually know somebody doing that. They built a lake house in Wisconsin as a vacation home. Now they're talking about spending half the year in Wisconsin and possibly getting a small condo for half the year in Florida. And I said, why? And they said, we're still going to have family in Illinois and Indiana. We need to be close.
Well, that's why
And I said, it's always going to be Northern Illinois and Indiana. So,
they're retired, but they're like, yeah, because all our kids are here, we're not leaving. But well, my point was they're trying to find a place, and they're cash buyers, and
right.
literally anything that comes up that's worth two craps is under contract within that day and going for over asks still with a no inspection clause. I'm like, guys, I'd rent.
I know, right?
It's the two of you, your kids aren't living with you, and you have one dog. Rent and wait. Because I will not buy a house with a no inspection clause.
Right.
And it over ask with a no inspection clause. I don't need a house that bad.
Right. Right.
So, uh, but that gives you an example of how housing market that's still holding up. Now, I also know other areas that housing markets are not holding up. Bob, gold refuses to go down. Any chance gold will hit the weekly rotation zone?
I mean, I guess there's always a chance, but I like gold. Like, I honestly would have liked to have seen it go down to the 50. I'm sorry, to the 21. But that'd be a nice place to kind of add to it. But, gold, when you see yields falling and you start seeing this bad economic data, like we saw today, our fourth consecutive week of over 200,000 jobless claims, prices paid in the Philly Fed, 3x 3x lower versus what was expected on the prices. And then the headline number, just horrible, just horrible. And then the conference board's figures. I mean, the numbers are terrible. So when you see that, you see yields go down, gold gets a tailwind. Now, I would argue, I would look at like the last gold fell about 2.5, 2.7% in those 2 days. And now we've got it up 2 of the last 3, but it's only moved 0.5%. So it needs to get its legs under it. Otherwise, it will go down to the rotation zone. It hasn't yet. And before you guys ask, I'm still long gold. So yeah, there's that. I'm no longer long Bitcoin though. I sold that.
And I'm still expecting a corrective wave in gold. There's nothing that says that won't happen still. But that's a corrective wave, and then we could have another major leg up. Uh, Bob, are banks crisis stable already?
My opinion is that they are not stable because my opinion is the Fed is going to pause with an eye toward hiking again, but it's stable for now.
Do you think they're pausing in May?
Yes, I think this after this rate hike, they may not announce it, but I think they're pausing. I mean,
No.
my
Are they going to
understanding is
hike? I said, are they pausing in
they're going
May?
to hike in
What was
25
that?
basis points in May,
Okay.
and then they're going to pause. And I'm not sure if they're going to announce it or not. I lean toward the idea that they are going to announce it, that they're going to say this is a good place to wait and see if we need to adjust policy. And they're likely to say we're prepared to hike rates again if inflation doesn't continue to fall. I think they'll actually say those words more than we're prepared to move rates in either direction. Sure enough, we get some bad data and they move the rate cut to September from November on the Fed watch tool. They're already, I mean, people are just desperate for those rate cuts. But I don't think they're going to happen this year, which is going to keep the pressure on banks. We saw some regional bank earnings and they were mixed, right? Some of them were not good. So I wouldn't call the banks out of the wood by any stretch, although that Fed window is a pretty powerful thing because they're not actually buying assets, they're taking assets in as collateral. And those assets will mature at par. So theoretically, the Fed's not losing any money, but here's the kicker to it. Those banks, those regional banks that need to go to that Fed window, not only do they need to pay the fee to bail out SVB and Signature, which is being charged on all regional banks, they have to pay 5% interest to the Fed on whatever they take out from that window. So it's not cheap for banks, considering the Fed funds rate isn't even at 5%. Well, that's the high end of the Fed funds rate, right? The high end of the range. So the banks that have to go to that window have to pay for that money. So they have to pay it back or they have to just basically default and close, and therein lies more stress. So where is my mama Kathy? Is that Kathy from
Kathy
ARK?
Wood.
Kathy Wood? That chart doesn't look good to me. The ARK ETF? I don't like that chart at all.
Nope. Still watching for the big.
Dimitri, your mama is probably not feeling well, but we don't know where she is.
Bob, do you think the VIX will hit 50 by September?
I think the VIX is broken. Honestly, I think the VIX is broken. If you look at where the VIX was last year, we had one of the worst years in the S&P in a decade, right? And the VIX last year basically finished at its long-term average. The VIX has not necessarily been responding. I mean, you just look at where it was in October. right? In October, when we got the October lows, right? Look at where the VIX was, right? You got that spike. Now look toward just the fall that we had in like September. The VIX shot up into the mid 30s. Was it? It's just it doesn't seem to me to be working the way people used to think it did. When
Well,
we
now
came off,
with the
go ahead, Mike.
45% of the options are that are
Yeah,
traded aren't even aren't even considered on the VIX. I think they have to rework it.
I do too. I think the VIX is broken. And actually, Mike, it might be time to reach out to that Miami thing again.
Mm-hmm.
Anyway,
Yep. Inspectors for the mortgage company. Oh, boy, I've done a few homes, but the inspectors have saved me, and it's from stuff that I could not see.
hmm.
So I don't think it's just for the mortgage company. I mean, they've saved me from some stuff that I would have never found on my own. And by the way, if you're trying to get into a home, you're not going to be crawling around the attic through crawl spaces and everything else. That's what the inspector's going to be doing, looking at the foundation through those things.
Right.
Not me. Because unless it's blatantly obvious, like there's water seeping in through the foundation. Treasury General Account still isn't looking too hot after tax day, which should bring the debt ceiling into focus before the end of May. Will the markets care or ignore the political theater?
Well, I think the market will ignore the political theater because we've been down this road a million times. But you should definitely like pay attention to the fact that tax receipts are down so much that the debt ceiling is likely to end closer to the beginning of June more so than in July.
Mm-hmm.
So it's kind of a big deal that tax receipts are so low.
And
So I think go ahead, Mikey.
once you have to read, you're going to, the TGA, when it reverses, is going to suck liquidity out of the market too.
Yeah.
So that's going to be interesting. Sorry I interrupted you, Bob.
Sorry, you're good. That's it. I was done. I was, you know how I tend to say the same thing over and over again.
What was that?
Exactly.
I was just seeing if you were paying attention. What's the discount window Fed loans maturity date for bank loans? I believe when they return, the liquidity decreases further in the markets.
I'm not sure I understand the question.
What's the
What
discount
are the
window?
effects of Treasury generally? What are the effects of larger position? Oh, that's different.
Oh, I'll reword that, Pavni.
Yeah, I'm sorry, Pevney. I didn't understand your question.
Will UVXY reverse split? I have no idea. I
No,
do
I don't.
not trade UVXY because a
No
bunch
clue.
of these VIX, these I hate these ultra shorts because the bleed out principle. So who knows? I hate trading them, so I don't.
Just shoot the futures, guys.
Yeah,
You don't need to go into these double and triple levered short ETFs. You short the futures.
HYG working better than the VIX. Yeah, but they're different.
Yeah.
They need to fix the VIX. Yes, I
Right.
agree. HYG is a little better because the VIX just isn't measuring anything right now.
Or we can just talk about the Miami thing down the road. But anyway, I just
What's
wanted to get Miss Lucia worked up again.
what's the Miami thing?
There's a competing product at a Miami exchange, and they reached out to Mike and I last year. So it's a competing product to the VIX. That's all.
Georgie wants to know: will the U.S. dollar crash during the recession?
And it's going to depend mostly, well, again, with the crash word, Georgie Porgy, it's going to depend more on the Fed's reaction to the recession. Okay, much more on that in this particular case. Generally, we expect over the last 2 decades, maybe even 3 decades, that the Fed will act in a recession, and they may let this one go a little bit longer. I looked back at the PCE today, and since 2020, the absolute level of the personal consumption expenditure price index is up 22.5%. Because again, it's an index, right? That averages out, very simple average, to 7.5% a year over the last 3 years, 2.5 years, whatever you want to call it. I went from February to February, so it's 3 years, right? February 2020, 2021, 2022. Yeah, it's 3 solid years. So not calendar, trailing 3 years, 7.5% for each trailing 12-month period. The Fed, if they were true to their adjusted average of 2%, they had said that if inflation got above 2% and stayed there for a long time, they would need to get inflation below 2% and have it stay there for a long time. Now, I'd argue that the 2% level, that the inflation had already stayed there, below there for a long time. So the Fed may tolerate higher inflation. Let me rephrase that. The Fed may tolerate higher rates even with a recession, just to get inflation buried before it cuts. Also, if you go back to the question that Coco had about why UK and other countries still have high inflation, the other countries are likely to be hiking rates a little bit deeper into the cycle than the US based on their levels of inflation, especially the Bank of England. Of course, the ECB keeps bragging that they're going to do that. I don't know if they are or not. From that perspective, that would hold the dollar lower, but then pop it back up when they were done. So there's just a lot that goes into play. It's a very difficult thing to answer. Just, will it crash?
Miss Lucia, I'll comment on the dollar index after we're done with Bob. Just a couple more questions because then I got to run too.
Yeah.
Big question with the dollar under file from rival countries and currencies. What happens as the market? What happens to the markets as the greenback loses its dominance?
It's not going to.
No,
So
this is all over. I see this on FinTwit all
really
the time.
it's really overblown.
Look at the percentage of global transactions that are still dollar denominated. Will it?
It's massive.
It's massive. Okay.
Like, I don't think anyone in this online room will see the dollar get replaced. We'll all be dust.
Now, down the road, will the dollar lose its dominance? It's already lost some of it, but it's all this talk is way premature.
Mike, let me throw something in before you let me go and talk about the dollar index with Miss Lucia.
Yeah.
I don't have the dollar index correlation, but what I do have is the euro correlation to the ES, and it's -4, which means that this is the 60-day correlation, which means that the dollar index is probably somewhere close to +4, +5, something like that, because the euro is the biggest part of the dollar index. And that's just not much of a correlation. It's almost non-correlated. So I wouldn't worry so much about it. You should just look at the things individually.
It's not enough of a correlation in the short term to make a difference. In the long term, the dollar trend does.
Yeah. But I mean, Miss Lucia's asking about today's dollar versus today's S&P. I can even go down to a 30-day correlation, but the 60-day is good enough for me to say that they are currently non-correlated in the short term. So, I mean, you'd agree, Mike, +4 is basically non-correlated, right?
Well, it's still correlated, but not enough that
it's near impossible to find a zero. I remember that from my Fund of Fun days.
And you have the markets and the dollar index pulling back today, but the dollar index to me is poised for another break higher. So, which shifts a multi-week downtrend potentially. There's no trigger yet. I need it to break out. But today, the dollar was down, the S&P was down, the NASDAQ was down. People make too many short-term conclusions from short-term things. Just like yesterday, was it yesterday where I was talking about like wheat and natural gas? Both had major top patterns, both came down to hit a bunch of targets from their major topping patterns. Does that mean wheat and natural gas are correlated? They were both going down, and the correlation was there for a time, but it doesn't mean they're naturally correlated. And it doesn't mean if you say wheat goes down over the next month, natural gas has to go down, or wheat goes up, natural gas has to rally. That because the correlation can also get broken. So that's another thing that with from my when I used to do a lot of pairs trading, people would come up with these pairs and they're like, well, these are this correlated, and right now they've decoupled, and you'd look at them and they'd be like trading Pepsi against GM. You're like, that makes no sense as a pairs trade, because what does Pepsi have to do with General Motors? They're not even in the same like category of so don't I mean you're trading like GM against Ford. Now there'll be some correlation with the overall auto sector and that, and then things between the natural balances, but that makes more sense from a correlation standpoint than looking at like Coke versus Intel. I mean,
Right.
they could be correlated for a period of time. They could be inverse correlated for a period of time, but be very careful looking at correlations. Now, the dollar does have some more, especially longer term, can have some more correlations and can go up stronger in correlations over time. So that's not what I'm saying between like a Coke and a GM. But be very careful just looking at correlations or coming up with short term conclusions because two markets did the same thing for even 60 days.
Mike, I'll give you one more piece before I duck out. It's like there might be one more question, but 180-day correlation is negative 48. So again, as you get longer and longer, you get closer to the correlation you're talking about. That's as far out as my short-term data that I have here goes. So the dollar is about plus 50. I'm sorry, negative 50. So inversely correlated about 50% of the time in the last 180-day cycle.
Hey, Lauren. Last thing. Bob, why is Bitcoin lose is a correlation with the NASDAQ?
All right. First of all, T-Bag, it's a good thing that it did. Okay, that's a good thing. But the second reason is because you just think about the profile of a Bitcoin tourist. And I'm stealing that from the crypto people because I actually really like that phrase because I think it fits really well. I would be a Bitcoin tourist. Okay, someone who does not have all his assets in Bitcoin and isn't in it, isn't ride or die. I'm holding it till the end. I don't care what happens. I just like buying it when I see a pattern and then selling it when I think the pattern's over. That's a Bitcoin tourist. Or those people who just bought it at 19, rode it up to 60, whatever it got to, and then rode it back down to 9. Those are Bitcoin tourists. What you have involved in Bitcoin now, the Bitcoin Cash volume has been dropping dramatically, although the futures volume has been stronger. Um, you essentially have the people who actually believe in the asset. One of the things about the people who believe in the asset was they've said it's more like gold, but doesn't correlate to anything. When the when Bitcoin was correlated to the Nasdaq, it was mostly on the way up, and that's because people were making money in Nasdaq trades, and they said, "What the hell? I'll throw some in Bitcoin." So it was the same type of person, somebody who would like a tech meme stock. I don't even know if there is one, Mikey, but a tech meme stock would say, "Hey, I doubled my money here. I'm going to buy some Bitcoin." The use case for Bitcoin argues that it shouldn't be correlated to the Nasdaq. So that's my reasoning. I hope that made sense to you.
All right. See, there's a good comment. When drug dealers start holding yen, let me know. Or, I mean, when you start doing the transactions and stuff, because you go anywhere in the world and you say, "Do you say take dollars?" People go, "Yup."
Yeah.
Once they
Most
go,
places they prefer
"Nope." What was that?
many places they prefer it.
Yeah,
They actually, when they know you're American, they ask you to pay in dollars.
exactly. Now, again, it will shift over time, and will lose some status. But all this doomsday that the dollar is going away is way overblown, from my perspective.
Right.
All
All right,
right.
guys.
Thanks, Bob.
Yep. I'll talk to you guys next week.
All right. Thanks. Bye. What was this? Pavneet Gordon Johnson after Tesla earnings. Hey, SEC, is it illegal for a public company to say on earnings call they can fart? What's that? Can they can what? 24 karat gold bricks? Is that oh boy. Tesla. By the way, here you go. Here's your it's not the weekly's not closed, but the double is officially confirmed and triggered on a daily basis, but we'll have to see tomorrow. Where does that, if this double plays out, we could see a retest of the lows from January. And then it could break below that, but there you go. So let's just take a look at this. We got a down close into the rotation zone, still holding the trend line on the closing basis. Again, from the thing I had this morning, this little rotation didn't take it out, but it played out, ran up just above the first level I marked off to the second level I marked off. Strong reversal, and then, of course, you're buying into the close. But tomorrow being OPEX, we'll discuss based off the over price. Major support is still 4,100. If we hold up around here, there's a fair amount of stuff at 4,150. Does it have enough strength to get back to 4,200? Don't know if that's. I'm going to be focused on the 4,150s at least overnight. That area. By the way, for the people also trying to learn, here's the Nasdaq little stuff. And remember, it doesn't have to call the end of the move. And if you didn't spot momentum bars, those were momentum bars. Nasdaq still coming down. I'm just going to be watching this, but about 13.1. If we hold up, I'll be watching 13.1s tomorrow. Still holding the rotation zone, although finally a decent close since back on the 12th in the rotation zone. The Dow coming back to key support. We don't have to harp on any of these. It'd be better to review tomorrow night when we see the European, or tomorrow when we see European price action. Not much going on the Russell. The DAX finally pulled back to the rotation zone. First connection with the rotation zone. First real connection since back on the 28th of March. Notes triggered a %B buy with cycles at the bottom. So I'm watching for follow through to the upside on that. Dollar index. Now I am watching for the breakout. However, if we do have the breakdown, because it could go either way, you see the doubles off the table. It's now nearly a triple top and triple bottom. But from a pullback, if we do break lower, I'm watching for key support between 101.06 and about 188. The stronger trade for me is if we can break above the rotation zone. Crude, we've reconnected with the 50. That's what I've talked about, but there's no new setup. I will be watching for a long setup, especially towards the beginning of next week. Natty gas, not much going on. Gold, still watching for a close below 1997. And that is about it. So, Tesla 69 before 420. Okay, are you going to take over from Elon, Daniel? They could fart 24-hour cold bricks. So, with that, I will be back tomorrow morning. Sorry, I can't spend a lot more time on charts today. We've already gone an hour, and I got to get the dogs out before the storms hit. So, I will see everybody for a happy OPEX Friday tomorrow, and then a doozy of a week next week in terms of both earnings, plus the PCE numbers, plus the last full week before the Fed, and the Fed goes into quiet period. So, keep all that in mind and rest well for next week. Mike, what are your top 3 trading indicators? What are my top 3 indicators? Well, the top three that I have, I'm not including moving averages in there because that's just something I watch for rotations. But the top three things I utilize the most from indicators that aren't on the price chart itself: RSI, stochastic RSI, and with very different settings, and percent Bs. What's the concept of the rotation zone? It keeps me on the right side of the market. I don't trade crossovers. However, once something crosses, like here, cross, I watch for pullbacks into the rotation zone area, either intraday or daily. Like this, pullback, 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 pullback. First cross. Now I want to be on, focus more on the short side. Okay? Cross. And that doesn't mean there can't be bullish setups before that. Also, but it keeps me like, I don't want to go into this. These aren't great shorts. It's very quick shorts and extend. Look at all the dips we've had in here. 1, 2, 3, 4, 5, 6, 7, even today. Once we get back below the rotation zone, I'll be watching more for rollover plays. And there I watch for these reversals when we dip into the rotation zone. It also keeps me with the probabilities. For example, double tops against the rotation zone drop in probabilities for reaching all the targets. When the rotation zone's out of the way, the patterns test out even stronger. So it just keeps me from sane. A sane perspective, I could glance at something and know. Thanks, feedback. Good afternoon, Donald. You're welcome. You're welcome. And that's it. What levels in the NASDAQ needs to be broken to cause a real sell-off? Well, let's take a look at the weekly chart. First off, we can have sell-offs, but the first major area, I'm not saying we can't have sell-offs that can be rolled forward, but the first area that does some substantial technical damage is closing below the most recent breakout area. So around 12.6. Okay? The real major damage happens around 11.9. Why? That was the breakout area that really ignited this rally. See, it broke out in January above this level, came back, retested it, held, and then went higher. You get back below this level, it's very bad. And you're also below the 200 week again. Not good. But you'll have early warning signs. Even this potential double top, if it does, triggers an early warning sign. But that's a warning sign back into the weekly rotation zone. Is that enough of technical damage? No, I mean, it's a decent potential short trade, but it's not technical damage where I'm starting to say, okay, those October lows are in clear sight. Hope that makes sense. With that, I shall talk to everyone later. I'll see you tomorrow morning. Bye for now.